Thank you very much for coming to the CFA Institute Africa Investment Conference. Today, as we have conversations around investment on the continent of Africa, we also hope this will provide the much needed platform for networking.
It is our utmost pleasure to stand before you all today as the President of CFA Society Nigeria, and I want to extend my warm welcome to each and every one of you. This conference marks a significant milestone in our collective pursuit of advancing the investment opportunities and driving sustainable growth across the African continent. We have curated a lineup of esteemed speakers and experts who will share their knowledge, experience, and perspective on various sectors and investment themes. We will explore emerging trends, innovative strategies, and transformative power of sustainable investment practices that can shape the future of Africa.
Our mission at CFA Institute is to lead the investment profession with the highest standards of education, ethics, and professional excellence for the ultimate benefit of society.
Our continent was marginalized in the global scheme of things. On many measures of human development, our continent lagged behind. But the emergence of Africa from those days is now an acknowledged reality, with our large and youthful population, which provides both valuable human capital and huge markets, and with our expansive natural resources, the rest of the world is now paying the right attention that is due to Africa.
The African region is actually slowing down in growth. So it's actually very interesting, and it was very exciting listening to the Deputy Governor and seeing that there is so much opportunities coming in form of infrastructure, development, investment in new technology, and the startup economy.
We live in a global environment that now experiences shocks on a global scale. You have overlapping disruptions, overlapping shocks. You had the pandemic before it was over, then you have the Russia-Ukraine war. But that's over, you now have the Israel-Hamas.
We all know what we need to do to ensure currency stability and eventually, growth of our local economies. But then are we ready, to put in the hard work? Right, your currency will depreciate if you are importing more than you are exporting. Your currency will depreciate if everything, locally is dollarized. Your country will depreciate if you don't have a very good manufacturing base. So African economies, African countries, African leadership just need to get back to basic.
In fact, the 2000s are probably the best decade South Africa has had economically in the past century, aside from perhaps the 1960s due to the gold standard. But what has transpired since then? I think post-GFC, globally speaking from a macroeconomic outlook, we've seen rising inequality around the world. And whilst there's been significant asset growth and asset price inflation, this hasn't been met by growth in real incomes. And so the majority of the populations around the world have not experienced the same sort of boom that you see in the upper deciles. And this, of course, breeds discontentment.
We all know, most people here know that alpha is excess return over a benchmark. Okay, so that's important. If you had $100 invested in these asset classes over the last 12 years, you're essentially going to make the highest return in Nigeria has been in treasury bills. I think most people don't expect that. But equity has returned negative. Why? Because of what? Currency depreciation. A lot of the monies today are allocated to fixed income securities. And that is because, from the slide I showed you, treasury bills and government bonds have yielded more in dollars over a 12-year period than equities. But we know that most times pension funds are supposed to be allocated to what? To real assets, right? Private markets, real estate, alternative investments.
So if you get into currency risk, it means that like the opportunity to match currencies becomes important, because it turns out that like, it's interesting that Dave says that if you invested in treasury bills, you would have made money at a particular level. But the depreciation also has been, quite significant, which means that like, to get a real return, you need to get above the nominal rate. So one of the things we are finding in our own experience, which is an important trend, is that you actually have to be, segregate your assets, and match them according to the risk appetite and risk profile. And this is exactly what, frankly, you learn in CFA.
The first thing we did 4 years ago was we undertook a strategic review to ensure that the relevance of the CFA program was where it needed to be and where it should be going for the future. And so we conducted extensive market analysis, which included speaking with employers around the world in terms of what they were looking for from a skills perspective, as well as kind of a qualitative perspective.